Let's get back to the markets and let's bring in Eddie Ghabour. Good morning to you, Eddie. You say, well, I was just reading your notes here. You say, look, we will have to hit new lows before we hit new highs in the market because we believe we will be in a recession. That's what you believe.
Absolutely. Look, I mean, the Fed kind of dropped the hammer on this narrative that they were going to be cutting rates anytime soon. Basically, what they said is they're going to do anything they need to do to get inflation down. And the only way you can do that, in our opinion, is by forcing a recession. And right now, economically, when you take a look at what's happening, we are decelerating at a historic rate. We have a dollar at 20-year highs. We have inflation at 40-year highs. And the Fed hasn't even started accelerating quantitative tightening yet. It's going to be a very challenging environment, and investors need to understand, in our opinion, this market won't bottom until we are out of this economic cycle. And the economic cycle right now is decelerating while the Fed is tightening. There's very few places to hide in an environment like that. So you have to decide, are you a trader, where you want to trade around a bear market, or are you an investor?
Right. Well, you know what? September comes around tomorrow. It's typically not a great month for the markets. What are you expecting? I mean, how much worse can it get with the Fed using Jay Powell using the word expect pain?
So we have to see what they actually do versus what they're saying. If they do what they say they're going to do in regard to rolling over $95 billion a month off their balance sheet while they tighten rates, it can get a lot worse. We've never had tightening that fast in this short a period of time. And understand this, the rate hikes that they've done hasn't even gone into the economy yet. It takes months for that to go in. So the big risk is they're going to over tighten. I believe they already have, and we're going to have a hard landing. If we're going to have a hard landing, things are going to get materially worse over the next few months before they get better, in our opinion.
Very quickly, Eddie, how do investors play that?
Look, I think investors, if you're worried about risk management, you have to have a cash position. And it can't, in my opinion, be a 5 or 6% position. It has to be meaningful enough so that way when we bottom, not only are you having less volatility, but you have dry powder to buy the dip. This whole narrative of being fully invested all the time, just in my opinion, won't work in this type of environment.
Well, you've said it and laid it on the line. We hear you. Eddie Ghabour. Thank you very much, Eddie. We appreciate it.